Good morning, everyone. First of all, thanks a lot to all of you for coming here and being a part of this of INOXGFL Vision Day. Maybe many of you are already aware that I have now recently joined this group, this esteemed group, and will be probably now sitting on this side of the table. So most of you are aware about that. So I really thanks to this company and to the entire group for giving me the opportunity. So for today, here we are to share our vision about INOXGFL Group. We have many plans for in future. Many of them may be aware about that. Many of them may not. So today it's an opportunity for our group to present all that in front of you. So on behalf of INOXGFL Group, first of all, I welcome once again everyone. We have Mr. Vivek Jain, our chairman, and MD sir, our INOXGFL Group. Mr. Devansh Jain, Executive Director of INOXGFL Group. Mr. Dr. Kapoor, CMD and CEO of Gujarat Fluorochemicals. Mr. Kailash Tarachandani, who is our Group CEO for unwavering, and Mr. Jain, who is Group CFO for INOXGFL Group. In today's agenda, it will go like this. First of all, our chairman sir will share his vision for the group. It will be followed by Dr. Kapoor sir, who will share his vision for Gujarat Fluoro. Then Mr. Tarachandani sir will take care of the entire group's business dynamics changing in current environment. It will be followed by Mr. Jain, who will be sharing the view on the financial, and at last we will be having Mr. Devansh Jain, who will share and will give his visionary statement and will close it with his visionary statement about the group. So first of all, I will welcome all of you. Please join the seat. So once again, thank you everyone. First of all, we will start with Mr. Vivek Jain, our chairman of INOXGFL Group. He will share our vision for the future of about entire group.
Welcome everyone to the INOXGFL Group's Vision Day. This is the first such session we are having, and we hope to make it an annual event. I am pleased to present before you our current positioning and our future outlook. INOXGFL Group, with a legacy of over 90 years, is one of the large business groups in India. It is a forerunner in the two business verticals, chemicals and renewables, that it operates in. INOXGFL Group is among the top business groups in India, having the deepest expertise and the widest array of offerings in the energy transition ecosystem. I will start with an overview of our chemical vertical. The chemical business started in 1990, and at that point of time we were having a single product, which is refrigerant gases. GFL scaled to become the largest producer and export of refrigerant gases in India. However, with refrigerant gases, when in the early 1990s, refrigerant gases were deemed to be ozone-depleting substances, and we had to move out from refrigerant gases. We successfully converted the sunset industry into a sunrise industry, forward integrating our refrigerant business to fluoropolymers. Today we are one of the global leaders in fluoropolymers with businesses spread across the globe. We are amongst a select few globally to have such a wide array of fluoropolymers, be it PTFE, PVDF, FKM, PFA, micromarkers, amongst others. We want to further strengthen our leadership position in the segment through our higher end value added offerings with much higher margins. We have also ventured into battery chemicals business on the back of our core strengths, which are expertise in fluid chemistry and our presence in cutting edge high performance materials. The current socio-political environment has opened up a very large opportunity for GFCL EV to capitalize on. GFCL EV is catering to this market through the widest array of offerings under one roof, supplying our products to the largest OEMs globally and domestically. In terms of global landscape, with large customers setting up gigafactories for battery manufacturing across the globe. However, the supply is limited to a single country today. Through our portfolio of products, we want to offer a credible alternative supply chain to our customers. Our vision is to become a global leader outside of China in this segment, growing our revenues and profitability multifold from here. We have already developed products for the hydrogen economy, PM membrane to be used in electrolyzers for producing green hydrogen, which is being manufactured globally today by only a few players. This is a further extension of our existing fluoropolymer business into a much higher value-added product. I believe GFL is today positioned to deliver strong growth in its traditional as well as the new energy business. The group forayed into renewables business in 2009. The initiative has single-handedly been driven by my son Devansh. Inox wins IPO in 2015 was a very proud moment for our group, as it was one of the largest IPOs at that time, a validation of the rapid achievements and the potential of the company. However, Inox faced a difficult 5 to 6 years due to the sectoral downturn due to a change in policy. But now with that difficult phase behind us and with the learnings from that period, as a group, we have become extremely focused and cautious on our strategies to continuously strengthen all our businesses as well as deliver our growth. Let me briefly touch upon each company under our renewables vertical, which we will detail later in our presentation. Inox Wind undertakes the manufacturing, project development and execution of wind projects on a turnkey basis. Inox Green is into the operation and maintenance of renewable projects with a growing portfolio which is currently at 3.5 gigawatt. Inox Green is our IPP and solar manufacturing arm which holds huge potential for value unlocking. Today, the renewables business is spread across the entire value chain, right from manufacturing, commissioning, O&M and generation. I believe the renewable arm is on the cusp of a massive growth journey with a significant potential of value unlocking going ahead. I am confident that the efforts of the past several years should start yielding results in terms of revenue and profitability of our group. Both our chemical and renewable verticals are on very strong footings and poised to grow substantially over the next decade. At INOXGFL, throughout the journey of the past several decades, we have been extremely resilient and adaptive to adversities. We have successfully turned multiple threats in industry, crushing regulatory and policy changes into new opportunities, be it the ODS regulation of refrigerant gases or policy changes in the wind sector. We continue to be nimble-footed, ever evolving, and are aligning the group with the new age industries. We eye the leadership position in any one of the industries or sectors we enter into, be it fluoropolymers. We are amongst the global leaders. Wind, we are amongst the top 2 players in India. Similarly, we are eyeing a global leadership position in the battery material space, catering to EV and ESS space. We are also eyeing a leadership position in the entire renewable space. Our ideology is to commit capital in businesses which are futuristic, have longevity, and where entry barriers exist. We are not shy of committing capex for growth. At INOXGFL Group, we endeavor to build new businesses while strengthening our existing businesses. We support our businesses wherever required. In fact, as promoters, we lead from the front. Today, we are building several businesses which will significantly grow our top line and bottom line. Our vision is to more than quadruple the EBITDA of INOXGFL Group in the next 3 years. Our endeavor has always been to create significant value for all our stakeholders, and we continue to be committed to the same. With this, I would like to close my brief to this august audience. Our team will now take you through a bit more details on the future growth journeys of our company, starting with Dr. Kapoor on GFL. Thank you.
Thanks a lot, sir. Thank you so much. Now, may I request Mr. Kapoor, sir, share his vision and view about the GFL.
The world is ushering in a new era of sustainability. Enhanced product life cycles with minimal eco-disruption is the way forward. Our products will stand for high performance with sustainable processes and applications. We create chemistry for a greener tomorrow. We are Gujarat Fluorochemicals Limited. Value through green chemistry. Headquartered in Noida, India, GFL is a part of the multi-billion-dollar INOXGFL Group. Manufacturing locations in India, a captive fluorspar mine in Morocco, offices and warehouses in Europe and USA, and a marketing network across the globe. GFL is one of the preferred suppliers of fluoropolymers, chemicals, and refrigerants. GFL commenced commercial operations in the year 1989 with India's largest refrigerant manufacturing unit in Gujarat, India. The facility has multi-purpose plants, a state-of-the-art R&D facility, and a pilot plant for scale-up. In 2007, with forward integration, we commissioned one of the world's most integrated and technologically advanced fluoropolymer facility at Dahej in Gujarat, India. The Dahej facility manufactures fluoropolymers, chloralkalis, chloromethanes, and allied products for backward integrated production of key raw materials. With best-in-class equipment, quality assurance laboratories monitor product quality with utmost precision and steadiness. Gujarat Fluoropolymers Research Center, GFRC, is a dedicated research center for product innovation and application development. Equipped with advanced instruments, GFRC specializes in customized testing and provides technical support to our customers. The GFL story is built around innovation, integration, and professionalism. We believe in sustainable products, processes, and practices that will help us become part of a circular economy with minimal carbon footprint. While our products touch millions of lives every day, our quest for a cleaner, greener, and sustainable future goes beyond the obvious. GFL. Value through green chemistry.
Good morning, everyone, and once again, a very warm welcome to INOXGFL Vision Day. The canvas has already been painted by our chairman, and the vision is what we want to become. I'll share some more details about INOXGFL Group, and particularly about the GFL part of the group, which is chemicals as well as the battery chemicals. So if you look at how does it transform into very broad numbers. So overall, current business segments are where fluoropolymers is a leading contributor, and what we expect in next 3 years or so is the fluoropolymer, which you see here, appear to be more than 50% of our portfolio. In fact, to be precise, it's approximately 60%. We expect it to come down overall, and then battery chemicals to take over, which is a high growth business, and we expect that to become one of our major growth driver for the business. Broadly speaking, we'll have few years from now, battery chemicals is the leading component of our business, followed by fluoropolymers, and then the bulk chemicals and fluorochemicals. Bulk chemicals and fluorochemicals over a period of time will become a smaller fraction. Having said that, we expect that pie to grow significantly going in next 3 years. The vision is already been set. Yes, we expect the EBITDA to be quadrupled, and accordingly the revenue will increase significantly. So this is how the pie look like a few years from now. Can you go to the next slide? And just to take you through where we are in fluoropolymers, we are today have a very highly integrated operations. Most of you will be familiar with this slide, which is there all over. We believe in backward integration, and that has been our key strength. And this will continue to be our key strength as we go forward. And when we talk about the battery chemicals, you will see that strength will play going forward. Clearly, all the fluoropolymer tree that you see, we start with very basic raw material like salt and then go down to fluoropolymers. If we go to the next one, the fluoropolymer verticals. We have PTFE, micropowders, PFA, PVDF, FKM, and PPA. There is a significant growth potential which exists in fluoropolymer segments as well, and that is primarily led by multiple drivers. Of course, the evolution of battery chemicals, where fluoropolymers goes as binders, is a driver which we expect to play in case of PTFE and PVDF. And other fluoropolymers also have their own set of drivers. And particularly if we look at FKM, we expect FKM to have a significant growth potential because of driven by the requirements in vehicle, the fuel to be ethanol blended. With 20% ethanol blending, the FKM has a very strong role to play in the current vehicles, because the normal NBR material will not be able to function there. Similarly, if we look at the PFA vertical has a very strong potential, again driven by the semicon industry, which we know is seeing a very strong growth potential in next few years, driven by the new fabs and the new semicon manufacturing setup which is coming up across the globe. And finally, the PVDF, which of course I talked about as a binder, and PTFE. Today in fluoropolymer, we have a very strong position, because over a period of time we have been able to develop the technical know-how and also backward integration that we talked about. The fluoropolymer products are based on a very strong validation and qualification period. So after having developed these different kind of grades for fluoropolymers and going through the qualification period, this creates a significant entry barriers for any new entrant to come in. And as I stated many times earlier, over a period of time, our approach in fluoropolymer has been to go up the value chain and go up to higher and higher grades and qualify ourselves in more stringent applications. So we see a very high growth potential in this, again driven by EV, in fact EV and 5G, which is again the cable application where some of the fluoropolymers are used as for the conductors. So overall potential for fluoropolymers, we still see a very high potential, even though we have been talking, and I'll talk about the battery chemicals. Fluoropolymers itself continue to grow, even though in our overall pie, it used to be coming down from say 60%, coming down to say 35-40% in terms of pie, but the growth we expect it to more than double. So that's something that we expect. Just to take you quickly through the applications. Fluoropolymers applications are some of the common application that you would see is the pots and pan, where you see the coatings of fluoropolymers. These are multiple applications. You see canopies in stadiums, which is again of fluoropolymers, coatings on the because fluoropolymers are the specialized high performance materials, so applications are embedded into multiple things which you sometimes see into day-to-day application, sometimes it's not visible as clearly. Having said that, this is used in day-to-day applications, and with the emergence today of energy transition, which is either in the battery or on the solar or on hydrogen, in all areas, fluoropolymer has a very strong role to play. As some of you may be knowing, for example, in hydrogen economy, the electrolyzers are needed, and fluoropolymers are used as a membrane in these electrolyzers. So it has a critical role in almost all segments. Today, if we talk about space, the high performance O-rings, gaskets, material which is required, which can sustain harsh chemical environment and which can sustain high temperature, is all fluoropolymers. Normal materials do not perform. So in terms of application, today with emergence of the new areas, I think it has a very, very strong role and very high potential to grow. Now I will come and talk about the new areas, and I wanted to spend a lot more time on the battery part. And I think this slide more probably would be known to all of you. We have stated that our product where we want to play in are three verticals. One is electrolytes, where it's salt, additives, and formulations. So that is one area which we call it the electrolyte vertical within the battery chemicals. Typically batteries are made of four parts, which is cathode, anode, electrolyte, and a separator. In this, we are planning to be present in electrolytes, binders, which is used for cathode as well as anode, and in cathode active material. Binders is typically fluoropolymers, either it's PVDF or PTFE, depending upon whether it's a dry cell or a wet cell cathode. And cathode active materials, we are planning to be in LFP. So our offerings, if you look at our product portfolio, is battery chemistry agnostics, because whether it's NMC or it's, as you may know, there are two types of chemistry which is prevalent in lithium ion, which is LFP and NMC. The first vertical is completely agnostic of NMC or LFP. Both battery would require electrolytes and salts and additives to be there. Binders are also agnostic, which is both NMC as well as LFP would require fluoropolymers as a binder. And in cathode active material, this is where we are focusing mostly on the LFP chemistry. So today, and this battery applications is required for mobility, wherever the energy storage is required. And today, the energy storage is required in mobility segment, which we are calling it EV, and ESS, which is the energy storage. Because when we talk about today energy transition, when we are moving toward renewables, whether it's solar, wind, or any other renewables, the storage is required. And that storage is going to come from battery. So battery is again an integral part to the overall energy transition. And ESS is where we also expect to see a strong growth going forward. So today we have a integrated facility in Gujarat where we have set up our first plant for electrolyte, salts, additives, and also LFP, which is going to be commissioned very, very soon. With this product portfolio, we are attempting to target almost 50% of the cost of the battery, of the LFP battery. And this is just a cost breakup is given here, you can see that. So we are trying to target a big chunk of the overall battery component and the chemical that is required for the battery. Let's look at the market scenario in battery, and our approach here is to present an alternate supply chain. Today the entire battery supply chain is contained in China. It's primarily one country's dominance across every battery chemical, whether I talk about LiPF6, LFP, it's completely there. So our proposition is to present an alternate to China, and our approach has been to become the first mover in this segment and try to capture the opportunity which is there. Today, if we look at it, there's a huge supply and demand gap. The entire demand which is outside China, there is no supply which is outside China. Okay, and the market potential that we look at in terms of vehicle growth is significant. As you can see that vehicles numbers are almost going to have a CAGR of close to 30%, which is going from 26 million to 91 millions. Correspondingly, the battery demand is also going to grow up significantly. Today, almost overall demand is close to 1 terawatt hour, these numbers are actually up to FY30. So this number is going to expected to grow up to almost 5 terawatt hours. So what number that you see here is a 5160 is 5.1 terawatt hour. Out of this, of course, a lot of it is in almost 1 terawatt is expected to be in China. Correspondingly, the battery chemical market is also expected to grow significantly, and we expect this market size to be almost $116 billion, which is a very large opportunity. So today, this size of market is very big, and the supply which is available outside China is very, very limited. So in view of the strong double-digit CAGR growth that we see in battery material demand, we are very, very well positioned to capture it, and we have been one of the very early mover in this entire area. Again, the demand for overall battery is driven, of course, by ESS segment also, what we indicated. Clearly, today the demand in outside China is low. India, of course, is relatively low, but we expect this number almost to come up, because we talked about two areas. One is ESS and EV. one more thing that I would like to highlight is because in the cab material, our focus is primarily on LFP. And one of the reasons to focus on this area, because LFP batteries are relatively lower cost options compared to NMC, and we expect this battery segment to have a significant growth going forward. Secondly, LFP is a preferred choice in ESS segment, which we expect to grow significantly by FY31. The ESS segment will become almost close to 0.9 terawatt hour, which is 880 gigawatt hour as you see here. And this will all be LFP mostly. There are other competing technology, but the way we are seeing it evolve right now is mostly LFP. And if we look at the country-wise growth, we see a big chunk of it, of course, is coming in from US, which is close to almost half terawatt hour, which is coming in US. India is also expected to grow, however, the Indian markets are relatively behind. Based on the data that we have, the Indian market is expected to reach a level of 200 to 250 gigawatt hour by around FY30. So battery storage system overall is expected to grow significantly, and this is again in context of LFP, which presents a significant opportunity for us and significant growth potential for us. If we look at the segment-wise, let's say we talk about LFP cab. This is cab material is what is used for making LFP battery cells. We expect this to be a significant growth potential because FY31, this is almost close to a 1200 gigawatt hour that we expect. In terms of salt, if you look at it, which is used in both NMC as well as LFP, outside China, supply, if we look at it today, is very, very limited. Okay, we expect, and if you look at here, that this actually portrays the demand and supply gap that I was talking to you earlier. Outside China, the demand in almost all products is significantly higher than the potential supply which is available. With the new regulatory environment that is emerging, so most of the countries would like to have less dependence on one country, because energy is one of the critical part of the overall safety or the security of the nation. So one of the things that has been happening across the globe is to have an alternate and the robust supply chain for the material, and that is where we come in, because the gap in LiPF6 is significant. It's 291 versus 64, which is supply and demand. And similarly in electrolyte also, today the capacity which is projected outside China is 111, while the demand is 199. And similarly for binders, the demand outside China versus supply outside China, there is a significant gap. So this gives a wonderful opportunity for a company like us to be present and to be able to grow in this potential cater to the customer where the demand is emerging. Few more points I would like to add, which I have stated earlier also, that just like fluoropolymer, battery chemicals are also qualification-based products, and they require long-term qualification. So early movers here has significant advantage. Okay. Today, we are already present. Our LiPF6 plant is operational today at commercial scale. Our electrolyte plant is operational at commercial scale. Our binder plant is operational at commercial scale, going through qualification and the final stages of qualifications. LFP plant, we expect it to come by the end of this year and operational by before the end of this financial year. So in all the 4 segments, we will have the commercial plants operating, which is required to initiate the qualification process. So today, if I look across, outside China, GFL is one of the prominent players which can offer a commercially available, high quality material backed by our vast experience of dealing with specialized materials like battery chemicals. So this is really a wonderful opportunity for us, for a company like GFL, to play in this, and this is clearly one of the best situation to be in. If we talk about our market strategy and going into capturing these, some of it we have mentioned earlier, but we would like to say that we are also looking at expanding our capacities not only in India but also outside India to capture to the markets which is available, particularly in the US market. So our strategy now is to set up the commercial plants, focus on global markets, start qualifications and supply to global markets, and be ready for Indian market and present a strong player in India as and when it comes in. So this is what our plan is on, and this is in line with the vision that has been stated by our chairman, and we are fully going into this, executing this strategy, and we hope to achieve it in next 3 years. Thank you. Thank you so much.
Thanks a lot, Kapoor, for sharing our views on fluoropolymers and in such a elongated presentation on our EV battery side. Thank you so much. I will invite Mr. Kailash who will share his views on our Inox.
Welcome to Inox Wind Limited, where innovation meets the environment. As part of the INOXGFL Group, with a legacy spanning over 90 years, Inox Wind is proud to be a key player in one of India's largest business groups. For over 15 years, Inox Wind has been a pioneer in renewable energy solutions, delivering cutting-edge wind turbine technology that sets new standards for efficiency and reliability. We are a fully integrated end-to-end solution provider in the wind energy sector. From wind resource assessment, land procurement, manufacturing of wind turbines, commissioning, to operation and management of the wind farm, we manage everything. Our 4 state-of-the-art manufacturing plants, strategically located across India, position us at the forefront of the sustainable energy transition. With an installed capacity spread across India, we are proud to contribute to the nation's energy independence and sustainability. Our flagship 3 megawatts turbine is designed for optimal performance and minimal environmental impact, capable of significantly reducing carbon dioxide emissions. Trusted by leading independent power producers, public sector units, corporates and utilities, Inox Wind is a leader in India's renewable energy sector, empowering diverse clients to transition to clean energy. Join us as we continue to power the future together. Inox Wind Limited, where energy meets responsibility.
Good morning, everyone. I once again welcome you to this Vision Day. Thanks to Jain sir, who has already given the broad INOXGFL Group vision. Dr. Beer has already given more on the GFL side. My name is Kailash Tarachandani, just to correct not Tarachandani. And I have been part and parcel of this group for the last almost 13 years. As all of you are aware, India has set up a huge renewable growth target. We are targeting, as a country, targeting 500 gigawatt by 2030, which is like doing another 200 gigawatt of solar from here to 2030 and 80 gigawatt of around wind. And I see this is a huge potential, and I think for a professional like us who have been working for the last 10 to 15 years, it has been a dream come true. The kind of policies you see, the kind of growth you see, the kind of commitment you see from a group like this, and at the same time, it's a very well situation for the renewable energy, the kind of demand we see. We have gone through a very bad phase for the last 5-6 years during the when the transition happened from feed-in tariff to auction based, and later on COVID. But thanks to our promoters, thanks to overall backup which was given, I think we are here. We are ready to take most of the advantage of this situation in next 5 to 7 years. And this is where my goal is to highlight what we are doing, how we are doing, and just create a vision based on what Jain Saab has said, and at the same time based on what government wants, and be a more, I think as we are going into more and more renewables, I think as possibly you will know, when Devansh comes and talks, I think we are getting more and more becoming not only a profitable business, but more like a climate changing agency, where we are getting into a different segment, and at the same time doing it, जैसे कहते हैं, बिल्कुल शिद्दत से, get into after this and try and do that maximum out of this segment and help government to achieve the goals from that point of view. We have right now order book of around 3.5 gigawatt, which is one of the largest we have. We continue to engage with different customers in a very, very strategic way. We choose our customers many times who are very strong, not fly-by-night kind of IPPs who come by. We are doing business with PSUs. We are doing business with large customers who have base here, who has a solid infrastructure or financing capability. We are working with very closely with them. Our goals are very clear, as we have said. We would like to achieve 800 megawatt around this year. We like to go 1.2 gigawatt next year and go slowly but steadily and keep doing and go towards 2 gigawatt target in next 2 to 3 years timeline in terms of execution. We have built up our capabilities like this. One of our motives that we still believe and we still do a lot of turnkey, because we believe that we handhold our customers and at the same time we participate as a partner to our customers who are looking to do their own development. So many times, we say we are not an international company who will show you the contract, but at the same time follow very, very strictly, the guidelines, the way we work together with our customers. So we target to do this. Based on we are launching, we are right now at 3.3 megawatt turbine. We are focusing, as you would see, that a lot of people, a lot of IPPs have come up, and which is good for the sector also, because earlier only 2 and 3 OEMs used to develop, but today we see at least there are 15 to 20 IPPs or even some PSUs who are trying to develop their own project, and it mitigates the risk in terms of development. It helps us in terms of choosing customers and also work along with them. And I think one of the reasons, that's why we are also focusing more and more on technology side. We have now gone to 3.3 megawatt, and very soon, in a year's time, possibly we will be launching our 4 megawatt turbine. A lot of customers have appreciated that efforts. We will definitely continue to work on technology to lower the cost of energy, but at the same time focus better returns for our customers and better margins for us. And that's the reason we have upgraded our guidance, going from 200 to 300 big bits. taking 15 to 17% on the EBITDA side. Further, group's foray into solar, will further support wind, from that point of view, because I see a lot of hybrids are coming, and that's the reason why a lot of customers who were purely in solar yesterday, today talking about wind, because this is all for the one cause, getting more and more, firm power for the sector, from that point of view, and you're getting more and more hybrid and FDRE opportunities. So your working group is getting into solar, and that definitely helps wind, because most of the customers are common, and this is where we see, a very win-win situation. As on date, we have built up manufacturing capability of 2.5 gigawatt, which is sufficient for the near-term execution target. But we continue to build up more, and we are looking into more possibilities, and all of them on the sort of a leased capex or low capex kind of model, where we lease it out and we work on those models, so that we are a little nearer to customers. We are save on the logistic cost. We save on those the last minute hurdles of moving the items. So we'll definitely keep ramping up our execution capability. We'll keep ramping up our production facilities, go modern as much as possible in terms of technology as the demand grows up. It's as I said earlier, it's a happy situation where the kind of the opportunities you are getting at different places. Sometimes you decide what is the best from the organization point of view, what is the best from the sector point of view. We have built up, at moment if I say, we have built up more than a 1 gigawatt supply chain capability, and we are now getting ready in a year's time to go into a 2 gigawatt supply chain capability. And we'll continue to build up as the execution capability in country along with the IPPs increases. As I said, we will, at the same time, we will continue to develop our project development. We are, at any time we see that it could be depending upon how customers are ready, it could go anywhere from 40 to 60% range, where I will be doing own my turnkey, but at the same time, keep working on that so that our risks are mitigated, and when we make our turbines, they go, get erected, deliver power to the nation. We are, as on date, the way we have built up the supply chain, we meet the domestic content requirement, which is coming up in a big way by a year or so. So we make sure that our supply chain is indigenous. We limit our import to remain very, very cost competitive, and so that we have a strong hold whether we have a competition internally in this country or from outside. We will continue to capture the right market, the right customer at the right time. Overall, just to brief, from Inox Wind point of view, it's a very happy situation. We are very strong financial thanks to promoters. We have one of the largest order book. We are very low on the OPEX and CAPEX side. We are not looking too many CAPEX as such, but we have done what we had to do it to now capture very, very huge opportunities in the place. We have the supply chain, we have the technology ready now, and this all gives a huge, large cash flow generation possibility over next year to two, as we move along. Coming to other two companies where we are working on other initiative, part of Inox Wind, of course Inox Green, which is our services company. We have worked very strongly last couple of years to work on this, and our availabilities are higher than 96%. We continue to build better. We are integrating with our partners and customers on different services, like be it, for example, we are talking to customers where we can go even to 97, 98 and do some kind of revenue sharing mechanism. We are looking at added services like be it boosters, be it, carbon credit, some of those, so that not only it increases revenue for me, increases top line for me, increases margin for me, but also increases value for the customers. And we would like to take this as on date. We are roughly 3.5 gigawatt, 3.4 to 3.5 gigawatt, which we will take it to 10 gigawatt over the next 3 to 4 years. And this is both, organic, because Inox Wind has a 3.5 gigawatt order book, which will continue to grow, and it will continue to help Inox Green to organically grow. But at the same time, we are looking very, very selective and right and correct acquisitions, which fulfills our group's criteria, like as per our DNA, because we would not like to, we like to be absolutely very, very value conscious. So we look at the right value, and at the right time we are looking at different opportunities. We have done few last year, and we will definitely look for some of these acquisitions this year, so that we can surpass the target what we have, but at least look for this 10 gigawatt pipeline as soon as possible over next 3 to 4 years. Our customers, slowly are bonding, and I think there are different ways we are also working. I think there are two things I like to further highlight on the O&M side. I think what we are doing, and I think as a country is growing very fast, as I see personally, renewables need a lot of manpower, and it's a next exciting place to be there in next 6 to 7 years. What we are training, we are taking lots of trainings. We are becoming like an institution where we are training people to not only develop manpower for us, but at the same time it helps on the overall industry from that point of view. And at the same time, we are looking with customers at different strategies. Like for example, there are vendors where we are managing the better inventories. There are customers who are finding to better manage. The whole idea is how do we get the best generation, the maximum generation out of these assets, and that's the goal which we are working very, very closely in Inox Green along with all customers and across the value chain. Another company which I like to talk about is Resco Global, which is our EPC arm. And I think last couple of years, while the good part is, as I said, different IPPs are developing their own EPC capability or some of those things, but they always value a partner who is a very strong EPC. And this is where we are seeing that while Resco has been doing the EPC services for the last 14 years or so, we are one of the largest wind turbine solution provider. Starting from getting the MACMAS data to look into different substation infrastructure building up from that point of view. I think we are also adding more and more capabilities. For example, we are expanding our services into crane solution, which is again a sort of a differentiator in the sense because there are many customers who find challenge in managing in terms of cranes, and at the same time when they see that an EPC solution with an experienced guy bringing those kind of solution on the platform, on the table to give crane solution, and it helps my own growth, it helps my own project, it helps my customer project is really being appreciated. As on date, if I see in EPC, we have almost 5 gigawatt of project inventory, out of which, if I'm not wrong, close to 2 gigawatt plug and play basis, where we can, our customers can see that, our substation infrastructure is ready and we can plug and play and start the project as it comes across. We have commissioned more than 3 gigawatt, and with the new hybridization policies coming up, we will look into the opportunities to do solar on that, and that's again big opportunities where we can install 5 to 6 gigawatt of solar also along with it. That's a huge value unlocking within the project what we have already done there. Of course, Inox order book of 3.4 gigawatt helps this, and as we continue to do more and more business, even when the customers are developing their own project along with the EPC solution, some of those things, I think it makes us very, very, in a niche position where here is an IPP, here is an OEM who brings so many solutions on the table along with the latest technology, and at the same time able to give the right product solution. As you know, I think as I mentioned in Inox Green, I missed that point, the Inox Green will become more and more light, in terms of as we move the substation business to demerge substation business from Inox Green, and Resco will continue to develop more and more, from substation infra and more of this. Overall, as we said, we continue to focus on creating a complete energy solution. Overall, we are continuously moving towards achieving the government's vision for 2030. We are committed to deliver on our promises, and this looks very, very exciting as we speak today in terms of our next 3 to 5 years, in terms of what we have. We are confident that our strategic plan and initiatives will enable us to sort of, achieve our vision and contribute to India's renewable energy goals. Thank you.
Thanks a lot, Kailash. Now I may request Mr. Akhil Jindal. Akhil Jindal is our group CFO, so he will be sharing his vision about the group's financials and how we go ahead. Welcome, sir.
Good afternoon. As our chairman has just mentioned about the various vision, activities across the various group companies. Naturally, the vitamin M, which is money, comes in the play, and all the group companies are at a very interesting phase of financial capabilities, and you can see all the companies are becoming independent. There is no crisscross guarantee, no pledge, no support from the group companies, although every company is there. But all financial decisions are taken by the independent companies based on their own strength, with no interdependency, nothing. So you can see over the past 2 years, almost 5,000 crores of equity has been raised. And these are all being raised at an individual company level. Some are secondary, some are primary. Even if it's a secondary, it has been infused back into the businesses to improve the balance sheet of those companies. Like for example, in Inox Wind, there had been some dilution in the promoter's end, but all the money was brought into the companies to improve the financial leverage. In fact, the companies are net debt free now. So you can see over the last 2 years, more than 5,000 crores of equity has been raised. If I just elaborate a little bit on that, so GFCL EV, as Dr. Kapoor mentioned, one of our prime growth company, we have raised 1,000 crore of primary equity here at a valuation of 25,000 crores, almost $3 billion. We have also raised 2,200 crores in Inox Wind, which is the secondary sale, and again that has been infused back into the businesses, back into the company for de-leveraging the balance sheet. Inox Green, which is a growth capital again, as Katie mentioned, we are looking at many inorganic opportunities. So 1,050 crore has been raised through primary. Resco, which is our EPC arm, as Katie mentioned, another 350 crores, again primary. And IGRL, which is the IPP business and which is independently with the promoters, again the primary capital at 300 crores. And obviously these are several rounds of equity that will be raised in Resco and IGRL based on the future requirement, based on the company needs, based on the growth capital. So this is something that we will do continuously as per the requirement of the businesses. And important thing is no corporate guarantee for the debt side has been given for anything. In fact, whatever corporate guarantee we had in the past from GFL to support the wind business, they are all now squared off. Everything has been paid off. In fact, every company, as I mentioned to you, are financially independent, so no interdependency has remained within each of the businesses. Also, it enables that there is a strong balance sheet of each business that has come up. So naturally, our focus is to develop all businesses through equity capital. The leveraging will happen primarily on the IGRL part, which is an IPP business, which is a very core capital requirement in that on a continuous basis. So debt will be raised at a very competitive rate. We are looking for a 80-20 debt equity ratio, as you would appreciate. Not many companies have been able to do at 80-20 at the commissioning stage or at a construction stage. But our endeavor is to raise at a most competitive rate at 80-20, and that is the only debt that we will see. And once the project gets complete, which is in a matter of say 6 to 9 months, 12 months, they would be refinancing and the pay down of the debt will happen. So that is the only debt that we are talking to be raised in the companies. Otherwise, every company, as we have seen in the balance sheet in the last 6 months, has become completely debt free. So we are sitting on more cash today than the debt of the company. Some of the NCDs are to be repaid, but those are something which have a fixed maturity. We can't prepay them. So as you see, all the group companies have gone through a very strong balance sheet route, and everything is now developed in a sense that the credit rating has improved, the financials have improved, and also whatever new businesses are being incubated. Like for example, we spoke about IGRL, which is our IPP business. Those are those are to be developed at the promoter's end, and promoters are also well funded. And this is where I guess all the risk capital and risk growth, even the solar, as I mentioned, Katie mentioned, some of the solar initiatives that Devansh is going to elaborate further are being done at the promoter end. So this is a differentiation also that we have created by having good operating companies with solid balance sheet, with solid cash flows to be financially independent. But all the new businesses or new Jain businesses where there is a lot of I would say initial uncertainty, although we believe in that business, but some uncertainties to start with are to be done at the promoter's end, so that there is a complete ring fencing of the operating companies with respect to the new businesses. As I mentioned to you, the strong credit rating across the group. While GFL has always been very well rated as a AA plus by CRISIL, and this was done in 2023. But over a period of time, despite a bit of a cyclical movement, cyclical numbers, the rating has been retained, rating has been continued. Additionally, the wind side has seen a massive improvement in the rating from triple B levels to we have got A plus, but we are knocking the door for AA. What it means is that both our group companies, by the end of this financial year, are going to be in the AA family, and that is a good rating for the growth businesses for the company that we are talking. And also it means that all the deleveraging efforts that have been done, and as I mentioned, the promoters hold their equity to bring back the money into the businesses, is also well appreciated by these rating agencies. We are also trying to form a consortium in each of our group companies. We have already successfully done it in INOXGFL, where, as I mentioned, no corporate guarantee, no collateral, no pledge, nothing has been provided from any other group company. Similar efforts are on the GFL side also, where the cost reduction on the debt side, on the working capital side, is a continuous effort, and we believe that there could be shaving of some further financial cost that is possible on the GFL side. So our efforts are again to bring the cost to the lowest level in both GFL and INOXGFL, and also raise money at the most competitive rate in the new growth businesses like agri. And obviously the equity is going to be placed at the right valuation at the right time for the right opportunity. So I think in overall basis, there has been a fair amount of changes that you would have seen in the group, and we believe that with the efforts going on in all directions, it will only strengthen from here on. So in the interest of time, I would like to stop here and request Devansh to take us to the final summary of this presentation. Thank you.
Good afternoon. I think we started in the morning, it's been about an hour, 20 minutes. Maybe all of you have absorbed a lot of data. With that, obviously painting out the vision for the group. Dr. Kapoor talking about the chemicals business, the EV business, Katie obviously talking about our renewable foray, and Akhil talking about the financial prudence across the group and how we're building out new ventures. What I'm really going to do is talk a little bit about all the businesses we're building out in the future, and kind of just briefly touch upon wind and GFL for a minute. So I think, as you may have heard, what we're really trying to do here is transition the group into becoming energy leaders. We believe energy transition is probably going to be the largest play globally, and I think across each of the business verticals in which we operate, whether chemicals through EV, renewables through Inox Wind, Green, Resco, and the newer businesses which we're building at Inox Solar and INOXGFL, which I'll elaborate as I move forward. I think we're going to capture the entire value chain, right from manufacturing to project development to execution to commissioning, services, and actually power consumption and power supply. To my mind, I think in India we probably just have one other group, which I think all of you are well aware of, which is as integrated, as deep, as spread out as what we're planning to do. I mean, if you look at it, all our existing businesses, and what I mean by existing businesses are really GFL INOXGFL and Inox Wind, the two legacy plays, are very, very strongly primed for growth. Fluoropolymers continues to increase across semiconductors, across a lot of the new age verticals, EVs, automobiles. We are further strengthening this position through entering much higher value added products and upping the capacities of our value added products. I think obviously there has been a little bit of a slowdown over the past 12 months when you had deflation and you had a lot of destocking going on, but I think as you move forward, GFL is probably going to get back to its original, what I would call gorilla avatar as you move forward. I think on the Inox Wind side of things, obviously while Kailash spoke a lot about it, I think we're probably the strongest and most focused business group in the Indian subcontinent, be it through promoter backing, promoter ownership, the entire leverage, cross leverage, we're leveraging across the entire group through solar, through IGREL, through GFL. And I think that's going to create unprecedented value as we move forward, obviously lead to a lot of value unlocking as well as we move forward. What's important is for our wind play and our renewable businesses, we have all the levers in play. We are financially stronger than we've ever been before. We have a net cash balance sheet. Our order book has been the largest we've ever had, even during the feed-in tariff regime. Our order book is 60% higher than that. Our manufacturing capabilities have tripled. We have multiple new plants being set up under an asset-light model. Our supply chain readiness is probably unparalleled today. People make excuses about supply chain not being ready. A lot of people have asked us questions about transformers, castings, gearboxes, generators. We are planning our supply chain 1 year ahead. So whatever we want for the coming year, we've already got that in place. Kailash mentioned our supply chain is already a gigawatt today. Over the next quarter, we intend to have a supply chain ready for 2 gigawatts, which is our business plan and the vision to achieve in 2027. As you would notice, we would be scaling up our wind business 5x in 3 years. So we did 376 megawatts last year. We're on track to do about 800 megawatts this year. We've publicly guided for about 1200 megawatts next year, with a caveat that we would be upgrading that as we move forward, and an ultimate vision of being 2 gigawatts in 27. That doesn't mean we stop at 2 gigs. I mean, as the market moves, and if we get to about 10, 12, 15 gigawatts, we probably would be taking about 25 to 30% of the market. We are working on margin improvements and further upping our profitability. Our profitability on the pure play manufacturing side is probably 50% higher than our closest competitor. And we've recently upgraded manufacturing EBITDA guidance from 15% to 17%, again with the caveat that there would be further upgrades as we move forward. I think we are on a massive growth trajectory in the wind business, and I think in the next 2 quarters, a lot of that will be reflected, given H2 is much larger than H1. One of the other points which I would just like to talk about, since some people have asked me that, our foray into solar is a strategic foray. This will only supplement wind's growth. It's not taking away anything from wind. And why we're doing that is because we've created such a massive moat around the wind business, where we are the second largest player in the business, which we intend to scale up drastically as we move forward. But there's a lot of demand for hybrid FDRE, and we don't want to leave that piece to other players. We've come in late, but I think we decided this foray about 2 months back. Our module plants, which will ultimately have a 2.4 gigawatt capacity over the next 12 months, goes live in February, March. And I think over the next 18 to 24 months, we will be setting up almost 5 gigawatts of manufacturing capacity for cells and modules. Again, at a capex cost, which is almost 60% of the industry leader's capex cost. Don't ask me questions around where that goes, why we do it efficiently, but I think we've done that consistently across our chemicals business, across our wind business. I also think green and resco will continue to grow massively. We've forayed into strategically or backward integrated into strategic components like cranes. Again, our payback period is shorter than the payment period we have for those cranes. So effectively, we are earning money from day one. We are backward integrating into and through Tolly Group into transformers and various other products, electrical control systems as well, so that we capture a much larger pie of the profitability without getting into non-core areas or focusing too much as a management team on some of the low-cost products. I think coming to the future businesses, which will be at the forefront of the group's growth, Dad mentioned the ultimate vision is to quadruple the profitability of the group in the next 3 years. Obviously, our internal targets are much higher, but I think publicly we've set out a quadrupling the profitability target over the next 3 years, which probably would at our scale and size, make us one of the top 5 groups in the country growing at this pace and scale. So, just to talk about the 4 ventures which we will be focusing on is GFL EV, GFL Green Hydrogen Solar, Renewables and Inox Solar. In GFL EV, while Dr. Kapoor is really taking you through a lot of the details, I think broad numbers, we're looking at a 6,000 crore capex, a top line asset turnover of about 2x, with a profitability goal of about 25%. So that's broadly what we're looking to do over the next 2 to 3 years. 3 years. We are looking to become global leaders. Almost 80% of what we would produce in terms of our eventual capex, in terms of the eventual capacities we're setting up, would be for the global markets. It's natural that we will be capturing the Indian market, but the Indian market is too small today, scaling up. So I think we should become probably 1-2 in majority of the products we make in that segment. Be it LiPF6, be it LFP, be it binders, ex-China. Globally, we should be number 1 or number 2 in each of these product lines. We are in discussions for long-term supplies, perpetual agreements with some of the largest global OEMs. We have some in place, and I think we are working towards strengthening that. I think there is an unprecedented demand. It's a unique situation. The IRA in the US, obviously Trump coming in and announcing massive tariffs on China, only exacerbates our growth further and pushes us to invest faster and faster in that business. The GFL solar and green hydrogen side is still a little distance away, but we are developing PE membranes, a lot of fluoropolymers which would be used in solar. Again, I think a niche business, but something which could scale up massively and be a large profit generator for the group. Talking about some of our forays into the renewable sector. So there are 2 forays which we are doing. One is Renewables, which is privately owned IPP, owned by the promoters in the group at this point in time. We're looking to set up about 3 gigawatts of wind and solar hybrid capacity over the next 2 to 3 years. We've already ordered out about 750 megawatts of wind and about 250 megawatts of solar, which should be up and running over the next 3 to 9 months. We have about 150 megawatts already operational. We have PPAs in place with the group, of course at very competitive terms, at which they are buying from other C&I players. And we have LOIs and various agreements in place for a lot of this sale to larger C&I players. We would also be playing on the exchange. Given the group's financial might, we have the ability to raise capital on an 80-20 basis with the ability to sell part of our power on the exchanges. So we would be leveraging that for the next 3, 4, 5 years, given that there is a large opportunity to sell power, wind power particularly, on the power exchanges. We have multiple sites already in place, access to which exists. Hybridization would lead to obviously a lot of growth in RESCO, but enables us to leverage our foray into solar and renewables, given that we already have about 3.5 gigawatts of executed projects, 2 gigawatts of plug-and-play infrastructure available in Inox Wind and RESCO. That's existing 5.5 gigawatts of capacity which can be plugged in for solar on our existing grids without doing anything new. I don't think a lot of people get that, but that is a huge advantage. Connectivity, site access is probably the biggest hurdle in terms of scaling up this business. We have raised a small chunk of capital in that business. We've diluted about 10% across some high quality HNIs in the country. But as we move forward, we would be raising capital in that business, but at the right time. There's no point raising capital too early. So we are well capitalized, well funded for our existing foray into that business. The other piece of the pie is Inox Solar, which is our recent foray. We've not really spoken about that. We would be making larger announcements on that over the next couple of days. But that's basically, again, privately owned. It's just on the manufacturing side. As I mentioned, that's looking at about 5 gigawatts of solar and cell capacity over the next 2 years. We're placing it in places where a big chunk of that comes back through capital subsidy over 3 years. Obviously, the initial investments will come in from us. As I mentioned, our capex costs are virtually 60% of the industry leaders' capex costs. So very, very lean, very high payback, no debt, again fully funded by equity. Leverages IGRA's position, leverages Inox Wind's position where a lot of the PSU tenders require us to do hybrid projects, which they've kind of cancelled, which we've kind of changed because none of us supply solar, and I think that's going to be a big move for us in Inox Wind as well. A lot of our existing IPP customers who don't already are, who are not already in solar, such as 3, 4, 5, 6 of the largest groups in the country, obviously have broadly discussed that if you are in solar, given that it's hybridization, it's but natural that we would be looking to buy solar cells and modules from us as well. So it's a very, very well thought out play. It's not a Me Too policy. We're creating a moat around this business, unlike a lot of the announcements you see on the solar side. I think what's also important is we're not replicating our O&M play and EPC, which remain in RESCO and Inox Green. So RESCO and Inox Green are natural beneficiaries of our foreign solar. Inox Wind, obviously, it supplements Inox Wind's growth in hybrid tenders and FDRE tenders. Our aim really is to make this the fastest growing solar company over the next 12 months and probably the top 3 over the next 24 months. Just to sum up, I think what's important and what we've really set out to do, or what the base of the past 2 years in our realigned avatar of the INOXGFL Group, we've spent the past 2 years really creating the base, putting all the building blocks in place. I think GFL was always strong. Wind obviously turned around in this period, but we got all the building blocks in place such that we are now ready for a very, very massive takeoff across all our companies, chemicals, renewables, and the new ventures. What's important to know, barring IGREL, which is project finance on a self-sustaining basis, each of our companies today is net cash. Each of the new businesses we are building is built with equity, no debt. A lot of the equity is coming from the promoter side. Also, a lot of the equity is being raised across global investors. Akhil mentioned about 5,000. I'd just like to correct that. So over the past 2 years, 5,000 was over the past 9 months. Over the past 2 years, we've raised close to 7,000 crores across FIIs, Indian mutual funds, and some of the largest family offices in the country. And I think we've just gotten started. I think across businesses, what's also important is that we are not shy to give away stakes early. It's important for us that people make money with us and create value. I think over the past 2 years, what we've seen is we've, I believe, created significant wealth across GFL, across IWEL, Wind, Green. I remember, we started off with the IPO of Wind in 2015, where we were, the headlines said that we brought the wind back into the markets, and I think we created tremendous value. And then when the sector shut down, I probably had every investor coming in to me and telling me we've destroyed everything. So we had this back of our mind that when our time comes, we will create an army of investors backing us, coming into each of our ventures. And I think that's reflected across new businesses when we come in. Of course, we're fully convinced we're putting our personal capital, but we like to share that with larger investors so that they can make 5, 10, 15x across some of the companies which we're building out. Obviously, one of the largest endeavors or move points for the group is to be leaders in every business. So fluoropolymers, again, global leaders. Chemicals, again, global leaders. EV, obviously, one of the largest global leaders. Wind, we are the second largest. Green, we are the second largest. And that's probably going to play out across all our businesses, because we believe only if you're leaders can you drive policy, can you create moats, can you have the added advantage of profitability. I think all our new businesses combined with our existing businesses would throw up significant cash, which we would be looking to deploy across these new businesses, probably add more as we move forward, but currently I think our hands are full for the next 12 months. We have a lot of stuff going on. Hopefully the next time we are here, we'll probably see a much larger team of CEOs, given we are creating dedicated management teams for each of the businesses. Of course, Dr. Kapoor oversees the entire chemicals arm, and Kailash will be overseeing the entire renewables arm. But there are multiple CEOs coming into solar, IGREL, EV, green, so on and so forth. And yeah, just to sum up, I think rewarding shareholders, creating value is an integral cornerstone for the group. I suppose a lot of people say that, but we truly believe in that. We have diluted stakes in Wind, some of our companies at the cost of the promoters, because we would rather create a much larger value as opposed to on a small chunk, or a large chunk of a small pot. And I think that's really been the mission for us when we are selling minority stakes in some of our newer businesses which are privately owned. It's not that we need 300, 400, 500 crores of capital. We can fund it ourselves, but we would rather have more people join the larger shareholder base and create much larger value as we move forward. Thank you.
Across India, a silent revolution is unfolding. It is more than just progress. It is the promise of a sustainable tomorrow. At INOXGFL, we are the catalyst to India's energy transition. Our new age energy ecosystems are revolutionizing how power flows. For decades, we've been bridging the gap between traditional and new energy landscapes. From electric vehicles to green hydrogen, from solar energy to wind power, we are reimagining energy's potential. Our new age solutions reshape how energy powers our lives. Moreover, our technologies are now integral to everyday products, smartphone cases, electrical wires, kitchen appliances and beyond. But our journey doesn't stop here. Our mission is to touch lives everywhere, empowering communities through our impactful CSR initiatives. Sustainable energy created for the dreams and aspirations of every Indian. INOXGFL, leaders of energy transition, new age, new energy.
Thanks a lot everyone for sharing that how the INOXGFL Group is going to be the leader in energy transition. I hope it's all the businesses of tomorrow we are already in. With that, I open the session for Q&A. Since there is an acute opportunity for all of you to ask the question about the Inox Group, I will request everyone if you can restrict your question more on the group and related to the group rather than getting into individual entities, because for that we have ample times and there are multiple calls every quarter we are doing it. So there is an absolutely opportunity for all of you to ask about the group. So here we open the Q&A. I will request first if you can introduce yourself and then ask the question. Thank you.
Yeah, good afternoon. Thanks for taking question. Here. First on the EV side of the business, on the overarching thing, so we are looking at a 6,000 crores of investment in the next few years. Can you help us understand how are we going to deploy this cash, and 1,500 has been invested by GFL and 1,000 crore is what we have already raised. So how are we going to fund this 6,000 crore, and what is backing us today in terms of or giving us a confidence that we should be able to do this 6,000 crore, because globally the EV cycle at least is slowing down, and if you go by what the US new president is telling, he is talking of more drilling oil. So the world is again moving back. So in that change scenario, how do we see? That's number one. A related question is again, there is Make America Great Again. So MEGA is what brought Trump back. In that scenario, how we fit in the overall scheme of things, where the largest market become less open for the suppliers, and they are also talking of putting up additional duty on India. So in this overall scene, how do we see GFL and EV particularly being placed? Thank you.
Hello?
See, firstly, we believe that the movement towards EV is irreversible. I do slowing down of EV and talking about getting back to oil, etc. But I think this is a irreversible process worldwide. This is something which is going to come through. It might slow down a little bit, but I don't think that the direction is going to change. As far as we are concerned, we see that there is a lot of investments which have already been made and committed in the US, both by the automakers as well as the battery manufacturing companies, and that cannot be taken away. These companies will require these raw materials which we are talking about, because these raw materials are not being made in the US. Even made in the US concept can be for other things like making the cars themselves in the US, but US cannot be and will not be able to become self-reliant on all these chemicals which we are talking about. Some of these chemicals will take a long time for them to start manufacturing. It could take as much as 3 to 4 years for capacities to be built up there, and in any case, they will never be able to be competing with the likes of India and China. China, of course, want to keep out completely from the value chain. So I think the next big opportunity for supply chain development is in India. As far as salt is concerned, at IPF6, there is limited parts across the globe where LiPF6 could come from. Other than India and China, hydrofluoric acid is not manufactured. And I think that is the lead which we took. And also, once you get into the supply chain of some of these large OEMs and battery chemicals, it's very, very difficult for anybody to push you out. So, in any case, we are looking for a significant part of supplies to any one single customer. Typically, they will not have more than 2 suppliers. At times, they will have 3. But once you are in, and I believe we are in an early stage where we will be able to win in this race. Once we are in, I think it becomes a long-term sustaining business. And Mr. Trump or no Mr. Trump, I think this journey will continue. And Mr. Trump is not going to be there forever. So, and I think this is something. This is a direction which is irreversible. Not only in the US, Europe, India, China, everywhere. I don't think this can be reversed.
So, just to add on the project financing, so I think we're looking at about 6,000 crores of capex. So we've pumped in about 1,000 crores of equity already from GFL. We have publicly stated we are on the verge of closing another 1,000 crores, which is primarily with sovereign funds, private equity. That should happen in the near future. Not that we need the capital immediately. So with this 3,000 crores of equity, the internal accruals are large enough thereafter to kind of sustain for the remaining 3,000 crores of capital. So effectively, GFL EV will be self-funded fully, and all of GFL's cash flows will remain intact at Gujarat Store.
And just one more thing I just want to add, and we are not stopping. If anything, we are going ahead with and perhaps at a higher pace, creating capacities for LFP and LiPF6, because we see the market. We are in discussions with customers. We see the market emerging, and we want to be there from 26-27 when markets globally start picking up both EV as well as ESS. We want to be there with our products totally qualified and our capacity is intact, so that we can participate in a much larger manner.
What is the application of 6,000?
Application?
Yeah, so how are we going to allocate?
Yeah, I think as I stated, Sandesh, there are 2 verticals, electrolyte and LFP. Almost you can say 50-50, slightly higher on the electrolyte side. So you are asking for how 6,000 will be spent, is that right? Correct. So it's primarily on 2 verticals, which is electrolyte and LFP. Because binder we already have capacity, we are already present, and as I had said earlier, in fluoropolymers we have made significant investments on upstream in the monomer side. So only the incremental investment may be required to add more reactors to get binder capacity, which is not very significant, but big chunk of this will go into these 2 verticals.
But again, if I just look at battery weight, electrolyte is 900 metric ton per gigawatt hour, and CAM is around 2000 metric ton. So that 50-50 on a battery matrix really doesn't fit, right?
No. LiPF6, when I say electrolyte vertical, there are three parts to it.
Okay.
There's a salt, there's electrolyte, and additives.
So all this put together will be 50%, which is 3000.
Nearly 50%, slightly around that. Ballpark. Yes.
Okay. And these capacities will be committed, this is my last question, these capacities will be brought up as we sign the long-term contracts, or we anticipate the long-term contracts and we want to expand the capacity?
No, I think we see the business coming in. At this point of time, we are in dialogue with several customers globally in the US, Europe, as well as India. We see the market coming up. We are not going to put up capacities. As we sign PPAs, we know that the business is there. We want to ensure that the capacities are up and the business will come. So we are not going to pace it out on the basis of PPAs which we sign with customers.
Because we don't even have the land today, right? That's kind of
Sorry?
the land to put up the capacity.
Sorry?
We
No, you
don't
already
have
have
the
that,
land.
Sanjesh.
Huh?
No, we have that. I don't think you're kidding. We have sites, we have land. In fact, our existing plant, we're expanding on the existing site itself.
Correct. So that's 125 acres Jolwa, right?
No,
You're not aware about all these things.
Sanjesh, in Jolwa, we have enough capacity to put up our, in fact, we are planning to put up all our salt capacity there in Jolwa. We have another piece of land, which is 25 acres, which we have just concluded, we just got, which is the AC.
Okay.
Where we are going to keep on expanding further as we need more land. And of course, we are going overseas also. As far as LFP is concerned, we are putting up significant capacities overseas.
Okay.
In an FTA country, a country which has an FTA with the US, to enable us to, ensure that cater to the US market. And if there are tariffs coming in other parts of the world, I think remaining in that FTA jurisdiction will allow us to take the advantage of the fact that any proposed duties in the future, the impact of that will be minimized.
So we are also ring-fencing our operations from the duties in the US by going into the FTA countries.
Yes, that's right, we are doing that.
Okay. Thanks, Vivek. Thanks, Lisa, and all.
We'll request if you can request a question on 1 to 2 only, so that we can give a chance to other one also. Please. Please, Mike here.
I think a question on the overall market size, what you'll estimate for LiPF6 and LPF. I heard various numbers from Sir about 850 gigawatt hours for one of the countries by 2030, 250 gigawatt hours. If you can very simplistically for a simple financial investor tell us what would be the overall size of the market based on whatever 40% of the battery cost is in our area, and throw a little light on what is the specifics of the size of the ESS market, because that is a more recent evolution which has emerged. The EV business was something we are aware of, and it's a little easy to estimate. That will just help us in what percentage of the market would Fluoro be, in spite of Devansh mentioned you would be at 12,000 crores of eventual top line in the first phase of 6,000 crores of expansion.
I'll just add something to this, and then I would like to take over. So, our plan is, if you look at by 2030, to go up to 30,000 tons of salt, LiPF6, and about 2 lakh tons of LFP. That is our plan. LFP could become larger if the ESS play really pans out, and this is something which depending upon how the business materializes, we are planning to do. LiPF6 will be limited because that is also limited to HF capacity, and that is the reason why we are limiting 30,000 tons. As far as electrolytes is concerned, it's largely for the Indian market only. We are not going to export electrolytes. It's largely for the Indian markets because the electrolytes have to be manufactured locally for the simple reason that, there is an issue of quality if you are going to ship it from across, say from China to possibly the only other place. There is shelf life issues, there are logistic issues, there are refrigeration issues. So electrolytes will largely be manufactured in India. And we believe that with the fact that we have the salt and we have some of the additives, we should be able to have a respectable share of the Indian market for electrolytes. So I'm just giving you something that
So, in my last slide, I presented $115 billion is the size of the market. Okay. If you look at purely US market, by 2030 it's predicted to be around 1 terawatt hour, which is 1000 gigawatt hour. Out of that, around roughly say 75% is EV or 70% EV and 30% ESS, okay, which is approximately 250 to 300 gigawatt hour. Plus India, which is around 250, plus Europe. Okay. So there's going to be total 5 terawatt hour, which is expected by 2030. I gave you a split of around 1.2 here, roughly 1.5 to 1.6, or almost 2 people are talking about in China. So that is roughly 3.5, and then remaining in the rest of the world. Look at where we are. We are targeting 200,000 LFP. 200,000 LFP is roughly getting to 100 gigawatt hour. It's a very small number. And even in LiPF 6, where we say that we have a very strong position because we are backward integrated into hydrofluoric acid, there also the capacity and the number that we are talking about is barely 200 gigawatt hour. Okay. So it's if you look at these numbers, the demand side outside China is very, very significant, and the supply side is very low. So the way I see is we are pretty much limited by how fast we can expand. Okay. And one of the key and the most critical aspect of this is to get the commercial level plant, get the qualification, and then expand. So that's how what we are taking strategy.
Strategically, what we decided to get into this business 3 years back, we started looking at this business 3 to 4 years back, because we saw the opportunity. We saw that China was a dominant player. All these other countries were planning massive investments in US, Europe, and even in India, because everybody wanted to be independent of China as a supply source, because 40% of the cost of a car is a battery. And there was no way US or Europe car manufacturers were willing to buy that 40% from China. So this was a given, this had to come. So if this were a given, then what about the raw materials? And nobody wants to be dependent upon China even for the supply of raw materials, because China can just take up the prices anyway, they can drop the prices anyway. Nobody wants to, they want to have a sort of sustainable supply chain. And that is where we started looking at it from the first time. And first we started with LiPF 6 because there was a affinity, because we had hydrofluoric acid. Subsequently, when we started exploring the market, understand the business, we decided to get also into LFP can, because that again is going to be a requirement which is not going to be fulfilled within US or Europe, because the cost of setting up these plants and operating these plants is many times that in India. So we saw that as a good opportunity, and given the fact that we also had the binders, the PTFE and PVDF, so our offering to a battery manufacturer is very, very wide. And that puts us in a very strong position to be able to discuss and negotiate and supply contracts with these OEMs and battery manufacturers. And we see that as we sort of progress our discussions with these people, that the fact that under one single roof they can buy 4 critical raw materials, I think it becomes a very, very strong value proposition for them also. Then they know us as a company, because a lot of these companies have very, very, the evaluation process is very, very lengthy, and they cannot afford to make mistakes. They cannot afford to, go to suppliers who could fail them in the future, because that could mean an enormous disruption in their entire business in manufacturing cars, which is far, far bigger. This is only an insignificant cost in the whole ecosystem. So I think this is helping us, and at this point of time we are in discussion with many, many customers globally, and of course it takes time to make the first break, because even after you set up the commercial plant, it can take you almost a year to reach the quality which is required by these customers. It's taken us that much time, 6-9 months, and even after you've achieved the quality, to be able then to start the qualification process, because they will not take samples from you for qualification from a pilot plant or a lab plant. It has to be a commercial plant, which is the reason why we took the investment to invest first, even though some of these plant capacities are idling at this point of time, because naturally, unless and until the full qualification is over, the commercial contract will start. So that is where we are at this point of time. And I think we have already signed our first PPAs with for all the products, whether it is PTFE, LFP, and LiPF6, signed, so that I think emboldens us to believe that we will be able to get into similar kind of arrangement with some of the other both battery manufacturers as well as automobiles.
Jayesh.
Service.
So this is Jayesh. Thank you for the detailed presentation. So we shared a vision for the group, as in 3 years we are quadrupling our EBITDA. What is the base year that we are calculating here, taking here, because in FY23 itself, for GFL we had a EBITDA of some 2,000 crores.
So we're looking at a base of this year. So if you look at 2000 at the group level, Wind had lost about 600 crores that year. So at the group level we were 1400. We're making this year the base. We've got numbers out there, so obviously I can't talk about that, but if you look at the base broadly at about 2000 for this financial year, FY25, we're looking at quadrupling that. So it would be about 8,000 crores.
Great. And one last question is, since the group has created shareholders value through demerger, are we looking at demerging EV business also within this period? Or
it's not at this point in time. I think it's too premature. We're building businesses out. We would really look at, we keep all options open. Yes, we would like to create shareholder value, but not at a juncture where businesses are being built out. Once they've scaled up, once they're on their own and generating large cash flows, at some point in time we could potentially do that.
Good luck for the future.
Hello. Sanjay. Hello. Hello. Yeah. So my question is really compliments to you for delivering tremendous shareholder value. My question to you is, when do you expect to generate 2,000 crore sales in the EV business? Because in the con call you had mentioned that you will generate very fast, you will ramp up very fast. So when do you expect to generate 2,000 crore sales in the EV business? And second question is, then next year we'll report record ever profits in the history of group. So do we expect to give bonus in the Inox Gujarat Fluorochemicals also, as given by Mr. Devansh Jain in Inox Wind? Same policy will be repeated.
Look, I think
we are not contemplating that, but we have to look down in the future.
And I think on the 2000 raise, I think we've scaled up that business rapidly. As I think Dr. Kapoor also mentioned, and I mentioned, we have to first set up commercial plants. And again, so you have proto plants, and then you have lab scale plants, and then you have commercial plants. Again, once the lab scale commercial plants are set up, it's a 9-month odd validation cycle. So we've got LiPF6 running, we've got electrolytes running, LFP goes live end of this financial year. So I'm not sure if we will get to 2000 or what, but I think broadly, what I could certainly say is over the next 3 years, with a 6,000 crore capex plan, we would be looking at generating about 12,000 crores of top line, and we've guided for about 25% margins on that basis. Naturally, it's not going to be 0 to 12, probably 2, 5, 8, something like that. But let's not get into quarterly pressures, because I think for us what's more important is creating very, very strong, long-term businesses. I don't think we're looking at quarterly numbers.
Sir, you had mentioned 30% EBITDA margin, 30 to 35% in fluorochemicals as well as 30% in EV chemicals. So that works out close to 30-32%.
I think that is clear. This is a dynamic situation. Things can't remain the same forever. At a particular point of time, certain figures would have been mentioned, but the idea is, the attempt is that yes, in the fluoropolymer business the margin will be higher, and in the EV business because it's a large play, and so we are on the conservative side, we are expecting that there will be a 25% EBITDA margin, and on a capital output ratio of 2:1.
Thank you very much for clarification.
Hello. My name is Andre Purushottam. I'm a co-founder of our family office, Cogito Advisors. First of all, congratulations for having such a stellar record for the last 5 or 10 years. Absolutely wonderful job done. Now, my question is really on ROC. Perhaps because you've been in investment mode, the ROC has tended to be on the lower side. Now, could you explain to me that in a 3-year framework, how was this quadrupling of EBITDA profit? If you could explain the building blocks of it, what is going to contribute to what? What would be the snapshot at the end of 3 years in terms of your EBITDA contribution from your chemicals business and your energy business? And what would your ROC roughly be in that 3-year period? And whether ROC is a targeted metric at this point of time? Because it's possible it is not, right? Because you think that you are still in growth phase and you do not want to concentrate on ROC. So that's really my question.
So at this point of time, ROC is not targeted because, as you rightly said, we are in a growth mode. I think it will be very difficult for us to give a ROC number just now, and I won't even attempt to do that. But eventually, when we get to the levels which we are talking about, I think it will be a very respectable ROC. Second, in terms of EBITDA split, I think it will be 50-50% between the renewable energy business and the chemical business.
Any more
questions? The building blocks of the quadrupling of the profit.
So, the fluoropolymer business at this point of time is subdued because of market conditions, and we are expecting some of our capacities are unutilized, but we are expecting the commencement of growth on all our new fluoropolymer capacities which have been put up in the next 1 year, because the demand from the semiconductor industry is picking up, the demand from EV for PTFE and PVDF will be picking up, and FKN is picking up from the beginning of next financial year, because the ethanol blending mandate kicks in from there. Apart from that, there is one big major multinational which has pulled out from the market, and they could be, their facilities are closing down now, and whatever stocks which they have already given to customers will probably last for only 3-4 months, and that is much of that business. I mean, at least maybe about 20-25% of the business is something which we are eyeing as a company across different products. So we expect the silicon is expected to be significantly increasing in the next 1 or 2 years. So is PVDF for demand from the EV sector, PTFE also from the demand from the EV sector. So that's the basis of our growth which we are projecting in the fluoropolymer business in the next 3 years. Probably going to be doubling from where we are at this point. And we've got all the grades developed. We've got customer qualifications currently on. Silicon, for instance, is a very, very difficult business to get into, but we've got our products now qualified. Third-party labs have already, they are currently under testing with customers, and we expect that business to grow rapidly. So, on the strength of some of these new applications where fluoropolymers are going to get into, we expect that we will double our profitability in fluoropolymers in the next 3 years. if not more. Probably
Just
more.
one last question I had was, we talked about China being the big boy in the room, right? And so how do our cost structures in battery chemicals compare with China? And how does that affect our pricing? It's possible our cost structures are
so let me tell you that, we have been competing with the Chinese for the last 15 years. Since the time when we have started this vision, we have been competing with the Chinese. And we have flourished. Chinese perhaps, but we as a company, single company, export more fluoropolymers than perhaps all the Chinese companies put together. Perhaps not now, because some of the exports of some of the other polymers have gone up from China. But as a single company, we compete very effectively with China. As a strategy, we have decided that we will try and move away from the grades which Chinese are sort of competing. Chinese are not well equated to adapt to specialized requirement of customers in the Western world, US and Europe. They will go and sell, buy the truck roll, buy the container roll at cheap prices, the base grades. We effectively don't compete there, and we've tried to move away from that. So that is the reason why in the fluoropolymer business, Chinese competition is something which we are not concerned with. It has, in some grades it has, but largely we will be not competing with China on the grades which we are competing. But China, nobody can compete. In a way, the Chinese, they have tendency to, in everything they do, you cannot compete with China. And as a strategy, we moved away to ensure that we are not competing with China.
I think even on the battery materials, I think we are extremely cost effective in terms of our capex plan. Probably 10 to 15% more than China, that's about it. But again, China is not part of that game plan, given that they're not allowed in most of the countries, given new regulations coming in. I think your other question was also on the building blocks of the renewable side. I think majority of that is on Inox at this point in time. A little bit of IGRL has been factored in, but I think IGRL's growth plans are much larger. Inox Solar's plans are much larger. A lot of that is not being factored in, given that we're looking at conservatively quadrupling the profitability of the group.
And in the renewable space, just last question, second. I'm very glad you referred to the moats in the business, because I've been attending a lot of presentations by various players in the space, and I'm just not being able to see a moat in the business. They look all very undifferentiated companies selling the same product, which is power, and there are various models, EPC, non-EPC, etc. मुझे कोई फर्क नहीं नजर आ रहा है. पर आप मुझे बता सकते हैं कि आपके moats क्या हैं?
That would be true for solar, because since you mentioned a lot of companies, there are 20 solar companies. Wind, there are only 2 companies. The first moat is there are 2 players who control the Indian market. So the biggest moat is technology. When you put up a product, getting the design, then getting the supply chain in place, putting up a prototype is a 2-year process. Certification is another 1.5 years. So 3.5 साल बाद तो आपकी पहली टरबाइन खड़ी होगी. Nobody is going to come and spend 800 crores on a turbine which is running only for 1 year just because of certification. Even when we started this business back in the day, wind turbines was not such a big deal. Wind was not such a big deal. We had to first put in 200 megawatts of oven plants, demonstrated for 2 years before we went out and sold turbines. So yes, if you have 5,000 crores to spend and 6 years, then certainly you can get into the wind business. That is your fundamental mode in wind. Second mode is connectivity. In wind, we have access to 5 gigawatts of project site inventory, which nobody has. Barring Adani and NTPC, nobody else in India has that. Third is your supply chain capability and access to technology. And I think your question is more prevalent to solar, but I'm still answering that on the wind side, because the wind business mode cannot be replicated. And some of them, again, sum it up on the wind side is technology. The elongated period, no matter whether you have $5 billion, it's going to take you 5 years before you go out and start selling turbines. And by the time you get your first turbine type approved and start selling it, I come up with a better product. So again, your cycle starts. For us, it was chicken and egg. It's like chicken and egg, but we started back in the day. That's why you see today in the Indian market, there's such a massive shortage of turbines. As Kailash mentioned, we can take as much as we want, but we're scaling up massively. We're growing from 376 megawatt to 2 gigawatt which is a 5x growth in 3 years. There's no point me talking and saying I'll do 3 gigawatt, 4 gigawatt, because there are a lot of other pieces of the pie which need to be in place. We're looking at about 50% turnkey because everyone wants us to do turnkey. If we had the capability to do 5 gigawatts of turnkey, my order book today would be 10 gigawatts. I don't have that capability. I don't want to be in every state building lands, managing local political stuff and so on and so forth. Coming to solar, look, first and foremost, that's in the private domain. And yes, to be very honest, I don't think there's a very big moat. And that's the reason 2 months ago we decided to get into it, and our plan goes live in February. In 4 months from inception to starting production. And over the next 2 years, we'll probably have 5 years of manufacturing capacity, which nobody in wind has done, but on the solar side people can do. I think the real moat and why we are leveraging this is because we're looking at it as a strategic complement to our renewable arm. And what do I mean by that? When wind participates in a lot of tenders, right, to supply turbines, people want hybrid and FDRE projects. So they come and say, "आप किसी के साथ solar tie-up कर लो." I'm not going to tie up with someone else because solar वाले की balance sheet ही नहीं है. वो मरेगा तो मैं भी मर जाऊँगा. I'm not going to give bank guarantee for it. And we saw a lot of that and continuously increasing. So we said, how do we play this market? So we said, let's control our own modules. Right? And then because ALCM is coming in, the cell has to be controlled by you. So we said, we'll control the entire solar piece. That's how we got it. Second, our privately owned IPP play, which is setting about 3 gigawatts, is doing 1500 solar, 1500 wind. So it's not married to wind, because when you supply on CNI, your job is to maximize power supply, not to keep wind maximized. Yeah, solar maximized. So we have an internal requirement of 1500 megawatts of solar in the next 3 years. So if you put your tenders, and if you put this, I literally have a gigawatt order book every year already. The largest player in India, the second largest or the third largest is not even doing a gigawatt. The largest is exporting. Those are short-term opportunities. We're not looking at that. Trump announced some tariffs in certain countries. That can come, go. But our internal consumption, our PSU tenders gives us this one. Second, we have 5.5 gigawatts of substations already built. I don't think you heard that. I reiterated that point 2 times. Which nobody else has. Kailash mentioned 2 gigawatts of wind plug and play. So you can plug 2 gigawatts of wind turbines today if you want it. I have 5.5 gigawatts of solar plug and play, which nobody in India has. So effectively, I can set up 5.5 gigawatts of sites in the next 12 months, assuming I do the entire development. These are our modes. The other blah 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 which you keep hearing, I do EPC in solar, INOXGFL is all crap. So yes, solar doesn't have a mode, but wind has a mode, and we're leveraging our entire presence in the renewable business to create modes around the solar. Also, our capex is about 60% of the industry leaders' capex cost. So we are very, very lean. That's true for our chemicals business, that's true for our wind business. I can't answer that. I think there are a lot of smart people in this room. If you're a financial investor, you'll be sharp enough to understand that. So we operate like stakeholders rather than do anything else.
Thank you.
In positive time, if you can have this last question.
Rohit.
Sure.
Rohit Nagarajan from Centrum. 2 questions. First question is on the overlap or quantum of services and products which are offered or taken from the listed entity to the unlisted or private entities in terms of services or products. So is there any overlap? Second question, as you mentioned that we are going into the new renewable space including the solar and hydrogen. Why not done from the listed entity, given that you only mentioned that in the last couple of years we have deleveraged balance sheet, we become financially very stable. So why there is a change in terms of methodology, and these are all complementary businesses from the listed entity itself?
No, very relevant. Now, first and foremost, we've not taken anything away from the wind business. As I mentioned, Inox Solar is just a manufacturing arm. The entire EPC arm is RESCO. So RESCO grows. The entire O&M would be done by Inox Green. So Inox Green goes. Inox Wind owns RESCO and Green. So effectively, we've not replicated EPC and O&M because that's complementary. Solar, as the gentleman here asked, is a high-risk business. The wind business is a very strong mode. We don't want any questions around our wind business because that's, we believe, something which can't be replicated. Irrespective of having 5 billion on the table, it's going to take you 6 years. 6 years down the line, I'll be on a different pedestal altogether. Solar is a high-risk business. putting a commoditized business into our listed place, not something we would do. So as promoters, we're taking that risk. Having said that, we've been prudent enough not to replicate EPC and O&M in that business. So we've let that be at Inox Wind. And yes, Inox Wind has a very strong balance sheet, but Inox Wind's own growth is so stupendous. Growing 5x in 3 years is fairly unheard of in infrastructure businesses, unless you go inorganic. We're not doing anything inorganic. Services, Inox Wind is different. We're evaluating, but on the manufacturing side, there's nothing which is being done. So it's a well thought out plan. We've weighed all the pros and cons, and I don't think it's prudent for us to put risks in a non-mode business on the parent Inox.
And the product and services being offered between the listed entity and the unlisted.
As I mentioned, it's Inox Wind makes turbines. Resco does EPC for wind and solar. Inox Green does O&M for wind and solar. And Inox Solar is only a manufacturer of modules and cells. So there's nothing there's no overlap. We're well aware of stock governance and related party transactions. And I think for us creating shareholder value without putting risks on existing investors in our listed companies is more important. And that's also the reason why we're pumping in almost 1,000 crores into solar.
Any more questions?
Hi sir, thanks for the opportunity. I just wanted to know about the reverse merger of Inox Wind and Inox Wind Energy, because in the last conference it was mentioned that the court case hearing would be in the start of November. So any update on that? And secondly, on the Inox Wind margins front, I mean, our OPEX would be very much low because of the cranes coming in and the finance cost being being very low. So can we expect the EBITDA margins to be like around 20 to 22% in FY26 onwards?
First and foremost, with respect to the merger of IWL, EL into IWL, as we've said multiple times, I mean, as promoters, as management, we've done whatever we have to do. As you are well aware, in India, half the time the courts keep fighting. Date pe date lagte rehte hain, November ki date, December 6 ki lag gayi hai. Whenever it happens, it gets done. It makes us no difference. I think the businesses are the same. It just simplifies the structure and our commitment towards minority shareholders gets fulfilled. That's the intent of the management. I don't run NCLT, I don't control the courts in this country. Having said that, I would expect that to hopefully get done in the next 30 to 60 days, assuming the date pe date nahi lagti hai. We just need one final hearing. With respect to the margins, we've recently, about 45 days ago, upgraded guidances from 15% to 17%. With the caveat that there would be further upgrades as we move forward. I don't like to talk about everything upfront because I would rather deliver. I would rather under-promise and over-deliver. That's the mantra for the group now. We constantly over the past 4 quarters have upgraded guidances, be it volumes or margins. And what I've learned the hard way in wind is, आप 100 बोल के 99 करते हो तो सब रो रहे होते हैं. आप 100 बोल के 101 करते हो तो सब आपको चैंपियन बना देते हैं. So I think that's the mantra for wind. So yeah, hopefully we should be able to upgrade, but there's no commitment at this point.
Very well, thanks.
Do we have any more questions? So thanks, and definitely we have done a detailed discussion on our group vision and everything. I will also request if you can take some time out to visit our stalls. We have kept a technical person also there who can explain you the multiple products which our GFL arm makes. Also in terms of GSL EV also. So you can take a visit there, and definitely they will be followed by lunch. So all of you are most welcome, and once again thank you everyone for being here and being part of INOXGFL Vision Day. Thank you everyone, and thanks the esteemed board member for being here. Thank you sir, thanks a lot. So before we just move, just request everyone